Good morning, everybody. This is your DAX setups for today. So we've powered through this 18,090 and 18,042. Suppose you can actually just round it off to 1850, 18,050. We've kind of powered through it. We are at the bottom of this channel. As you can see, there's our channel there. So we are at the bottom of the channel. Oscillators are sort of grouped to the downside at the moment. We do have a crossover, which is bearish, but on the time frames a little bit higher. Look at the daily, fairly decent separation of the oscillators. And only problem I do have with this is that we have closed below this level of support here. The next level of logical support is at 17,832. Now just have a look at the weekly. We've only just crossed over on the oscillators here, so strong weekly move to the upside, strong trend. This could be a pullback in a bull trend, which is basically normally 2, sometimes 3 bars, and then starts moving back to the other side. So here's an example here: 1, 2, 3, 4 bars before moving up. So that is pretty much what could be going on, but I think we are very, very overextended. So in other words, we are overbought, extremely overbought. So I don't think that what you're seeing now here is a surprise. I've been expecting something to happen for a little while now. It's just quite volatile. So let's just get down to the lower time frames, because that's what we're more interested in. Higher time frames is pretty much a mixed bag. So from the 3-hour down, this is in a downtrend. So we're in a bear trend. We should be looking to sell. We're looking to sell off major levels of resistance. Now, there is a fairly strong zone here, and that zone is of 18,042, 18,090. So that is the zone that I would be paying attention to. And we'll look at this on the lower time frames. But from a 3-hour perspective, cross over all the moving averages, a very strong possibility that this is a downward trend that is forming. Now, this high, let's get it in, that is at 18,225. That is the only breakout at the moment that would indicate that this downward trend is ended, and we are looking to buy into this. So that is our short-term structure at the moment. So the minute you start getting down to our trading range, or our trading time frames of the hour and 15-minute, you'll see the logic in it. So there's the hour. We've been rejecting the 150 most of last week. It's been volatile, no two ways about that. Big ups, big downs. But we're in this channel, and the longer we stay in this channel, the more structured this is. So this is becoming a very, very well-defined structured move to the downside. So we can just add a few more levels in. Now what you're going to have to do is pay very close attention to your 1-hour levels, and then when you get down to your 15-minute, you're going to be paying a little bit more attention. So at the moment, just chaos. There were some bank results in the US that were not quite what I was expecting. This is what this gap is here. But then there's also Iran that's just launched a whole lot of missiles on Israel over the weekend. So you never know how war impacts the markets. It does impact oil as a start, but for the moment it just depends what the rest of the world does and how that would impact the market. So we'll have to wait and see what transpires there. We do have the rest of earnings now really kicking off in earnest now. So you've got the balance of the financial institutions first, and then you're going to get into the tech stocks next week. So for me at the moment, this is short, but it is extremely volatile. We do have this gap, so this area at 18,040, I would assume that gap is at 18,050, I bet. Let's have a look. 18,060, close enough. But this is the zone you need to be paying attention to. 18,092, 18,060, and 18,042. That would be the key area for rejection. So you want that gap to close. If a gap does not close, you have another area just above us here at 18,013. So I suspect this chaos of above and below the moving averages is going to continue on the 15 minutes. So what I would suggest you do is just keep your hour charts. Either divide your screen into two, keep a 15-minute chart and the hour chart open. So you can just keep an eye on what's going on. You can see the volatility on the hour here through 1 day. You see big move down, big move up, big move down, big move up, big move down, big move up. But you can see there is our hour level, which is 18,013 or 1800, and then you've got a little bit of a level just below that, or just above it, should I rather say, at 18,033. So that's the strong area, but there's nothing that changes the fact that we could bounce off 18,060 and even 18,092. The high of Friday, not yesterday, is the only thing that is going to indicate a reversal of this trend, and it is so far away that you need to be very cautious because of the volatility. So everybody has their own way of dealing with volatility. Myself, it's just a case of reduce your trading size, increase your stop loss zone. So if I'm jumping in here, I want to try and get a stop loss above the high. So 157 points, what am I prepared to risk? And that's 2% of my trading capital. Preferably I like less than 2%, but anyway, that's the rule of thumb for me, because my reward is at least 1-to-1, but I would suspect we are aiming for 17,832. So that's kind of my view for today. Pay very close attention to these areas here at 18,013. I suppose 1800 would be a round number as well, but 18,013, 18,033, 18,060, and 18,092. Those are the areas I'd be paying attention to. If that does not materialize, then you should see a break of these tails that have formed already, then price come back and reject them, and you are definitely heading down to 17,832. Hope that helps, and we'll catch up with you tomorrow. Cheers for now.